Today we're diving into a global economic story that's making headlines and shaping the world as we know it. This is a story that impacts everything from the prices you see at your local store to the decisions made in the world's most powerful political offices. China has just reported a record-breaking trade surplus, $1.19 trillion in 2025. That's a figure so large it's hard to even imagine, and it's sending ripples through the global economy. Let's break it down. Exports are what a country sells abroad. Imports are what it buys. When exports outpace imports, you get a trade surplus. This means more money is flowing into the country than out. China's surplus signals its manufacturing dominance and competitive pricing, but it also stirs global tensions. Countries around the world are watching closely. For countries running deficits with China, this can mean job losses, factory closures, and political friction that spills over into debates and elections. The scale of this surplus is historic, a massive flow of wealth into China, built over years of government policy, investment, and the world's growing reliance on Chinese manufacturing. This isn't just about numbers, it's about shifting alliances, new economic strategies, and the balance of power worldwide. We'll explore which sectors, like electronics, machinery, and textiles, fueled this extraordinary growth, how China's trade partners have shifted, with new markets emerging in Africa, Latin America, and beyond, and why trade with the US is falling, even after a much-publicized truce between the two economic giants. We'll also look at China's rising trade with Europe and Southeast Asia, where new agreements and partnerships are taking shape. And we'll hear the warnings from experts about the risks of global instability, as economies become more interconnected and vulnerable to shocks. Understanding this milestone is key to navigating the economic landscape of 2026 and beyond, whether you're a policymaker, a business leader, or just someone trying to make sense of the news. Let's break down the numbers, the drivers, and the global impact, so you can see how this milestone affects your world. The story of China's surplus is shaping the future for us all, and understanding it is more important than ever.
China's 2025 trade surplus soared to an unprecedented $1.19 trillion, a remarkable 20% jump from the previous year, setting a new record in the country's economic history. This figure highlights just how much more China sold to the world compared to what it bought, and it's a number that grabbed the attention of global markets. For every dollar China spent on imports, it sold significantly more abroad, creating a massive net inflow of foreign currency and strengthening its financial position on the world stage. This leap happened despite a year marked by global uncertainty, persistent inflation, and unpredictable market swings that challenged many economies. December capped the year with exports up 6.6%, double what economists had predicted, showing China's resilience and ability to outperform expectations, even in tough times. Imports also surprised analysts, rising 5.7% in December, making it the strongest month for imports since September and hinting at some recovery in demand. But looking at the full year, imports remained flat overall, while exports grew by 5.5%, further widening the gap between what China sells and what it buys. This growing imbalance, surging exports alongside stagnant imports, was the main force behind the record-breaking surplus. China's factories were running at full speed, churning out goods for global markets, but domestic demand at home continued to lag behind, leaving shelves emptier than expected. The result, China sold far more to the world than it bought, fueling its economic engine and reinforcing its role as a global manufacturing powerhouse. This sharp divergence between exports and imports is truly the heart of the story, shaping China's economic landscape in 2025. The world's demand for Chinese goods remains robust, even as China's own appetite for imports stalls, highlighting a year where global reliance on Chinese manufacturing reached new heights.
China's export growth, up 5.5% in 2025, defied global headwinds. From electronics to electric vehicles, Chinese products dominated global markets thanks to scale and price. December's 6.6% export surge showed the world's reliance on Chinese manufacturing remains deep. Meanwhile, imports stayed flat, revealing weak domestic demand and economic uncertainty at home. This one-way trade flow, strong exports, weak imports, explains the ballooning surplus. Even a late-year import uptick couldn't offset the year's overall stagnation. In 2025, China's economy was powered almost entirely by exports.
The most dramatic shift? The collapse in U.S.-China trade. China's exports to the U.S. fell 20% in 2025. Imports from the U.S. dropped nearly 15%. December was even worse. Exports to the U.S. plunged 30%, imports down 29%. Years of tariffs, export controls, and political tension have forced both sides to seek new markets. The trade war has evolved into a broader strategic rivalry, with supply chains rerouted and old partnerships severed. Beijing calls for dialogue, but the numbers show no recovery. The U.S.-China freeze stands in stark contrast to China's growing trade elsewhere. This is a major realignment in global trade, driven by politics as much as economics. The world's two largest economies are drifting further apart.
The decline in U.S.-China trade is puzzling, given a one-year truce announced in October 2025. The deal rolled back some tariffs and included a Chinese pledge to buy U.S. soybeans. Hopes were high for a reset, but the data tells a different story. Despite the truce, trade kept falling. December's 30% export drop to the U.S. says it all. Businesses had already shifted supply chains and weren't quick to reverse course. Even the soybean deal underwhelmed. China's imports rose, but much came from Brazil, not the U.S. The truce failed to rebuild trust or reverse the decoupling. Economic disengagement continued, regardless of political agreements. The damage to business confidence was too deep for a quick fix. The U.S.-China trade relationship remains fundamentally altered.
As U.S. trade collapsed, China pivoted to Europe and Southeast Asia. Exports to the EU jumped 12% in December. Imports from the EU rose 18%. This two-way growth signals a healthier, more balanced relationship. With ASEAN, exports rose 11%, reflecting deep regional supply chain integration. However, China's imports from ASEAN fell 5%, echoing weak domestic demand. China's export machine found new buyers, but its appetite for foreign goods lagged. This dynamic fueled the surplus and cemented China's central role in Asian trade. The world's trade map is being redrawn, with China at the center.
China's $1.19 trillion surplus is raising alarms worldwide. Such imbalances can trigger protectionism and threaten global trade stability. Economist Eswar Prasad warns the surplus could be as disruptive as Trump's tariffs. If countries respond with tariffs, a global trade war could erupt, hurting everyone. The surplus reflects China's production power, but also its weak domestic consumption. Experts say China must boost internal demand and imports to avoid rising tensions. Without rebalancing, the risk of trade conflict in 2026 grows. The world is watching for signs of change.
Beyond the surplus, China's 2025 trade data reveals key trends. Rare earth exports surged 33% in December, cementing China's dominance in critical tech minerals. But at home, deflation looms. Consumer prices were flat all year, missing government targets. Weak demand explains stagnant imports and signals economic fragility. Still, the World Bank forecasts 4.4% growth for China in 2026, expecting government stimulus and resilient exports. All eyes are on China's upcoming GDP data, expected to show 4.5% growth in Q4. This will reveal how well China weathered 2025's challenges. The government's next moves, especially on domestic demand, will shape the outlook. China's economic health remains a global concern. The world is watching for signs of recovery or further slowdown.
As 2026 begins, China's record surplus signals a new era in global economics. The world is watching closely as the balance of power shifts, and the ripple effects are felt in every corner of the globe. For China, it's proof of manufacturing might, but also a warning about over-reliance on exports and weak domestic demand. The government faces mounting pressure to stimulate consumption at home, even as factories continue to churn out goods for the world. The US is decoupling, with companies diversifying supply chains and trade ties shifting to new regions. American firms are investing in alternatives, seeking resilience and security in a rapidly changing landscape. Europe and ASEAN benefit from China's pivot, but also inherit the trade imbalance. New opportunities arise, but so do new vulnerabilities as these regions become more central to global commerce. Experts warn this isn't sustainable. Protectionist backlash could fracture global trade. Rising tensions and public discontent threaten to upend decades of economic integration. The big question: can the world manage these imbalances through reform, or are we headed for more conflict? International cooperation is more crucial than ever, but consensus remains elusive. China's surplus is more than a number. It's a sign of shifting power and rising rivalry. The competition for economic influence is intensifying, with every nation seeking to secure its future. The tension between global supply chains and geopolitics is growing. Every decision now carries greater weight, as nations weigh economic gains against strategic risks. How China, the US, and others navigate 2026 will shape global prosperity. Their choices will determine whether the world moves toward greater stability or deeper division. The path forward demands balanced competition, cooperation, and reform. Only by working together can nations hope to address the challenges ahead. The stakes are high for every nation. The decisions made today will echo for years, shaping the lives of billions. The world's economic future is being written right now, in boardrooms, factories, and government halls across the planet.